Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Ehrlich, director of research, digital assets at Forbes Crypto, to discuss Bitcoin performance. Steve, it's great to see you as always. Welcome back to Trade Talks. Bitcoin's on track for its first losing month this year. What's the significance of that?
Yeah, Jill, thanks again for having me. Bitcoin right now, assuming the current numbers hold, is going to be down about 7 to 8% in May, and as you said, it would be its first losing month so far this year. Going all the way back into January, Bitcoin actually jumped up about 35% to start the year. There really was no one reason for that surge, but I think a lot of it had to do with sort of shaking off the hangover that came with the FTX collapse back in November. And then again, in March, it surged about 22%. And in that case, I think a lot of it had to do with the collapse of Silicon Valley Bank, and then more importantly, Silvergate and Signature Bank, which are seen as crypto banks, and a lot of money that was being held in those banks to protect stable coins and liquidity in the crypto market, I believe, went into Bitcoin. So that kind of led to those two surges because they were sort of like asymmetric jumps. February and March, or excuse me, February and April were a little bit more muted, but I think what we're seeing right now here is some like a macro regression to the mean, for lack of a better term. We're still in a very high interest rate environment, high inflationary environment. Although a debt ceiling deal has been agreed upon, it doesn't mean that it has passed Congress or it's going to pass Congress. I think lawmakers are going to try to get that done, perhaps tomorrow. So we're still in kind of a cautious stage. And I think that's why we're seeing Bitcoin starting to drift back down. It is important to remember, though, that despite perhaps ending this month down, Bitcoin is still up 67% year to date.
The amount of Ether on exchanges is the lowest in 7 years. Why do you think that is?
Right. So the percentage of Ether, it is the lowest, as you said, in the last 7 years. And that that's an important statistic. But in order to I want to put that in context first. For instance, why do people put assets on exchanges? Sometimes it's just happenstance because of the unique setup of exchanges, where they kind of act as custodians and brokers and broker dealers and clearinghouses and obviously exchanges too. But in crypto, in many cases, money flowing onto exchanges, assets flowing onto exchanges, is typically seen as a bearish signal. People are going to put money onto an exchange if they're looking to sell it. So conversely, if you are pulling it back, if you're withdrawing it, that typically means that those assets are going to be put to other use, or just being held in safe cold storage, which is more secure than keeping assets on an exchange. In the case of Ether, which is particularly interesting, we're finding that a lot of those assets, 4.4 million specifically, have new amounts of Ether have been staked on the Ethereum blockchain. And that's really happened, I think, in the last 6 weeks. As we talked about, I believe last month, Jill, Ethereum finished a major upgrade about 6 weeks ago, where it finally enabled withdrawals for the 18 million units of Ether that had been staked or locked on the Ethereum blockchain, so to speak. So those assets have been flowing onto Ethereum, and that's, I think, at Ether's current price of about $1,900, that's worth almost $8.3 or $8.4 billion of assets. So that's a big reason. Typically, when money goes on exchanges, it's being used to sell, but then again, there's lower selling pressure because we're in a bearish market, and there's better ways to put that money to use. Just like any other investor, you want to make your money, make your assets work for you.
Also, stablecoin, the market cap there is dropping, as well as trading volumes. Why do you think that's happening?
Right. So this is another curious case, and it's a bit interesting. Stable coins are the primary liquidity backbone for all of crypto. For instance, if you want to buy Bitcoin, if you want to buy Ether or any other token, typically it's going to be priced in a stable coin, most often Tether, which is the largest stable coin in the world with a market cap of $83 billion and change. We're seeing a reduction for a few reasons. One, trading volumes are going down as we're still in this bearish cycle, so there's less demand for a dollar token that doesn't by itself generate any yield. But then we're also seeing Circle, which is the issuer of USD coin, the second largest stable coin, fell from about $43 billion to, I think today it's around $29 billion as far as its circulating supply. Circle was acutely impacted by the collapse of Silicon Valley Bank, when it had to reveal to investors and regulators and basically everyone that it had $3.3 billion in unsecured or uninsured deposits there. So a lot of the money flowed out of Circle or USD Coin into Tether. Binance USD, BUSD was shut down by the New York Department of Financial Services, the state's financial regulator, as well, or it's in the process of being shutting down. So it went from a market cap of about 19 billion to 5 billion. And a lot of that has all flowed into Tether, which despite, I guess, its controversial nature and its opacity with regards to talking about its banking and financial partners, is within shouting distance of its all-time high of about $83.2 billion in market cap. And right now it's about 83.1. So there's a general sentiment that we're going to need to see a reversal in stablecoin market caps where more money is flowing into them, because that is the necessary liquidity for trading. But there are some very interesting dynamics here.
And on the flip side, we're seeing AI tokens surge again. What do you think's behind that move?
Right. So crypto loves a good meme. It loves a really great sort of spirit animal. And we've spoken, I think, a few times so far this year, Jill, about AI tokens and projects that are trying to capitalize on the hype of AI. Sometimes we're talking about pure meme or pure copycat tokens. I think there's one even called Chat GPT. But there are some other legitimate, or I say legitimate, there are some well-intentioned blockchain-based AI projects such as SingularityNet and Render Network, which is kind of a decentralized network for rendering images. And I believe it was on the news today that NVIDIA's market cap has finally passed $1 trillion for the first time. We saw another surge in AI tokens. And for instance, I think AJAX, which is the token for SingularityNet, went up about 15% today. Render is up about 10%. They both pared down those gains. That just kind of shows the excitement around this space. That said, as I've said before to you, Jill, and to readers of my work, I'm skeptical right now about the pairing of AI and crypto. I mean, for no other reason than this. AI is very computationally intensive. Crypto is very inefficient when it comes to computer power and computation. So I'm not quite sure where that fit is yet, but people are going to try. If investors are interested in learning a bit more or getting some more exposure to AI, one place they may want to look, though, are Bitcoin miners who run very complex data centers. And I know that there are a number of miners right now that, while the economics of Bitcoin mining are perhaps a little bit less than ideal, especially with this declining price, they're looking to see if they can get into a higher margin business, such as high-speed computing and AI. Although it's not quite as simple as flipping a switch. There would be a lot of work that would have to, and investment that would have to go into actually being able to provide those types of services at the levels needed as well.
Particularly with the cost of capital being much higher now than it was just a year or two ago. Let's wrap up here with the OP token down about 7% before a big unlock tomorrow. What does this mean, and what's the significance of that?
Right. And so token unlocks, it's important to just first mention what these are. So token unlocks are sort of akin to the vesting of stock options. When a project wants to raise money, a significant 9-figure sum, what they'll do so that they don't scare the market that all those tokens might get dumped on the first day of trading, particularly if there's a surge, is that they will lock them up in certain intervals. They could be annually, it could be on a monthly cadence, but they'll do it in a way to kind of assuage purchasers of these tokens and users of these tokens that they're going to at least try to be more stable or have a more stable supply and not inject a lot of price volatility. Not every token unlock is the same. For instance, SWE Network, which is was a hotly anticipated layer 1 blockchain that I think went live with its mainnet this year, is going to be have about a $60 million token unlock, which basically means that about $60 million of SWE tokens are going to be become liquid. Optimism, which is a layer 2 network, it's the largest layer 2 network on Ethereum, which is basically a fancy way of saying that it's a scaling network for Ethereum, where it processes transactions at its own pace and then sort of anchors them back to the mainnet. They're the second largest one with a billion, I think $1.7 billion TVL, which means total value locked in applications on that network. They're going to have a much bigger one tomorrow. Right now, Optimism has a circulating supply of about 335 million tokens, and we're going to be seeing a $386 million token unlock, a 386 million unit token unlock tomorrow, worth about $600 million. So effectively, that's worth that's going to tantamount to about 114% of the current circulating supply. Is going to double the supply, and optimism is down, I think, about 7%. Today, it's down about 50% over the last few months after surging for a while before then. And there are fears that this is going to create a lot of sell pressure for the token when this happens.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thank you, Joe.